Is Netflix stock heading for a crash? It's down over 40% so far from its highs, but can we hit $100 per share on Netflix stock? So in this video, you're going to see a lot of reasons why there's a bearish case against Netflix and why Netflix stock could potentially head to $100 per share. Now, if we can get 150 likes on this video, I will create a video on the bullish case for Netflix and why we could potentially hit $300 per share on Netflix stock. So make sure to smash that like button down below to show your support. So the first issue I want to address here with Netflix stock, bearish case, is the high debt load that they have. So Netflix currently has around $12 billion worth of debt. And this was after the recent announcement that they're adding $2 billion to the debt load. Now, in a rising interest rate environment, this naturally means that Netflix will be paying a higher rate for any debt that they're borrowing. They keep making original content, which keeps costing them more and more every single year, and as a result, they have to keep taking out more and more debt. And although this is kind of expected in companies that are in high growth mode, they do take out a lot of money, they do go in a lot of debt. The issue with Netflix is that they're actually burning a lot of cash as well, which has a lot of investors concerned. So in 2018 here, you can see that Netflix is actually expected to burn around $3 billion in cash. Just try to put that into perspective here. Now, as you can see from this chart over here, Netflix actually has a very high debt to capital ratio compared to its peers, which is not a good thing. It means that Netflix has a lot more debt compared to the amount of capital that they have on hand. And another thing to note is that this chart was actually created before Netflix announced another $2 billion in debt that they issued, bringing their total to $12 billion. So that percentage will probably bring them in the high 60s%. Now, the Fed is expected to hike interest rates about 2 more times in 2019. And of course, every time this happens, this will continue to hurt Netflix as a company and most likely the stock as well. So unless Netflix can somehow manage to reduce that debt load in 2019 or maybe reduce spending on original content so they don't need any more debt, investors will most likely continue selling the stock and continue adding to the selling pressure for the stock. Now, my second reason here is in regards to competition. So 2019 is going to be a very tough year for Netflix in terms of competition. The biggest threat, in my opinion, is going to be Disney. So in 2019, going into 2020, Disney will not only be announcing their streaming platform and releasing that to the public called Disney Plus, but they will also be pulling all of their Disney content from Netflix. And as you can see here by this chart, after Netflix original content, the next in demand on the Netflix platform is Disney content. And to think that this will all be gone by 2020 will surely turn some viewers off of the platform. Now, Disney is also kind of going the same approach as Netflix does with their original content. Disney's going to be creating a lot of content that's unique only to its platform. But the benefit or the advantage that Disney has is that they have a lot of brand names behind them. And now the concern here for Netflix is that if Disney comes out with a platform that is price competitive to Netflix, say cheaper than Netflix for example, a lot of people might actually flock over to the Disney Plus platform and ditch their Netflix subscription. Now, of course, best case is people keep both platforms so both companies can continue to keep growing and keep putting money into this. But if something like a recession hits in 2019, 2020, people are most likely going to pick one or the other, and based on the information we've seen, there is a good amount of people that would prefer Disney content over Netflix original content, so they may ditch that Netflix platform and go for Disney Plus instead. So Apple is another competitor that is actually looking to pump a lot of money into original content, and as you can see here, by 2022 they're expected to spend over $4 billion worth on original content. And Apple, if any company out there, has the cash to spend on this. Amazon, of course, has its Prime Video platform, which it already has and already is accessible to all of its Prime users. And I expect the selection to grow as we go into 2019 and 2020. And of course, we have Google with their YouTube Premium option, which is experimenting with some sort of original content. Now, this is not really a threat right now, but this potentially could be a threat if Google decides to pump more money into this business moving forward. So back a few years ago, it was pretty easy to say that Netflix won the streaming game because you didn't have all of these large tech giants in this space trying to compete for a piece of the pie as well. But now that we see these tech giants with billions of dollars in cash sitting on their balance sheet, entering the space in a serious way, it has investors worried, and that's a big reason why the stock has been starting to sell off here in 2018. And this point right here actually brings me to my third bearish case, which is high valuation. So Netflix stock is actually down 40% from its all-time highs, but funny enough, it's still up 20% year to date. So as of right now, a lot of investors are still sitting there holding Netflix stock. They're still in the profit zone if they bought before 2018 or at the beginning of 2018. So they're not really worried right now. But my fear is if the stock price does get closer to $200 per share or even starts dipping below that, a lot of these investors will start either breaking even and getting out of their position, or start locking in profits as we get closer to the $200 mark. And of course, as a result of this, if this happens, there'll be a lot more selling pressure on Netflix stock, and we could potentially see the stock drop at an even more accelerated rate. Now, even with a 40% correction in the stock price, Netflix is still trading at a very high valuation here, with a PE of 85 and a forward PE of 90. It is understandable because they are a growth stock. However, when you consider reasons 1 and 2 as well, a lot of investors are not as excited to pay this premium on Netflix anymore. Now, Netflix stock actually started selling off before the broader market did, before we entered this sort of correction bearish market territory. Back in July actually is when Netflix started selling off. So you can't really blame this overall market weakness on the Netflix weakness that we see. Maybe some of the more recent movement in the stock over the last month or two has been because of the weaker market overall, but you can't necessarily just blame that because the fundamentals like we looked at here on Netflix is still at a very high valuation. And really, because of this high valuation, even investors like myself will not consider Netflix, even though I absolutely love the platform, because of the serious threats coming in 2019 from, like I said, Disney being the biggest. Up until this point, Netflix has been pretty lucky to demand a very high premium in the market for its service. But now that reality is setting in with points 1 and 2, investors are beginning to sell off the stock because they don't see as much upside in the future as it did, say, a couple years ago. And as this continues, it'll actually help drive Netflix valuation even lower to maybe a more reasonable level. And then at that point, I would consider looking into the stock to see if it would be a worthwhile investment. Now, Netflix was a very hyped stock in 2017 and even early 2018 until it had its correction begin in July, and ever since then it's kind of fallen off the radar. But like I said, there is still a bullish case on Netflix, but to see how strong that bullish case is, you guys have to get 150 likes on this video for me to release that. So make sure to share this video with a friend or a family so we can hit our like challenge for this video. Either way guys, hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.